Trend following has been the best style of trading for the past 30 years. There were times when traders made fortunes just by following the trend or following a simple system based on two moving averages crossover. The buy and hold strategy that was so popular by traders about a decade ago is dead today. Look at the euro to US dollar chart from January 2001 until July 2008. The uptrend was pretty strong most of the time. If you push the buy button, you would win most of the time even with a poor trading system. The consistent rise of the euro over the dollar was giving you a clear sense of the overall trend. Since July 2008, it looks like everything has changed. The trend direction is unclear, nobody knows what is going to happen next, and people are seriously preparing for the coming collapse of the single European currency. By the way, for Forex traders it would be nothing but another opportunity to make a profit, so keep smiling. Does it all mean that markets are not trending today? Of course they are trending. Trends exist and they can be traded up and down for profit. There will always be short-term trends in any market, the only question is when. So, the big question is, how do we find the best trending market and not miss the opportunity of taking trading signals in the direction of a strong trend? You will find a definite answer soon. The belief that trend following is an outdated trading technique is only partially true. It is true that there is hardly any market with clear overall trend direction. You could follow the temporary trend only if you are able to determine the trend correctly. This is the point where so many traders fail. A pair moving up on a 30-minute time frame can act exactly contrary on an hourly time frame. Even if you find a rare coincidence, a currency pair moving in the same direction on all time frames, you still need to know how well the market is trending to avoid very short-term trends. The solution is smart and simple. Before you discover the most simple and effective method to determine the trend, let's see what it's good for. All the trend following systems are based on one common approach. Buy the dips in an uptrend and sell the rallies in a downtrend. Let's reveal one simple trading system that actually made a fortune for one famous trader and his investors. The system SMA 5 and 20 is named after Richard. In the chart, you see two indicators, the blue line and the red line. The blue line is the indicator SMA 5, stands for simple moving average with period 5, and the red line is SMA 20, simple moving average with period 20. Richard's idea was very simple. Buy when the blue line crosses the red line upwards. Sell when the blue line crosses the red line downwards. Even a 5-year-old child could do this. Actually, there is nothing special about this system. All trend following systems are like this. Some systems are more advanced, with more sophisticated indicators, but the common approach is to buy the dips and sell the rallies. If everyone could do this, then what's the money-making secret? The answer is that Richard used this system in strong bull markets. Yes, trending markets. This important note is the key to consistent profits. The first trade was profitable because it was made in the direction of the strong trend. The next trades lead to losses as the market was turning up and down without a clear direction. Profits made in the first trade would be taken back in a series of losses. How Richard dealt with it was smart. He ignored all trading signals when the red line was not going up on at least a 45-degree angle. He wouldn't take any losing trades after the first trade because the red line is not trending at all. It is in a so-called choppy zone. So why was Richard able to make a fortune from such a simple system while others could not? Because others would throw this system away as not profitable. The only trick was to follow a good trend and not taking any other trades. What is the lesson from this story? If you know how to determine the market trend correctly, it could make a difference between losing or break even and winning. Richard used a simple moving average to determine the trend and filter trading signals. When the market was trending, he turned his system on. When the market was in choppy zone, he turned his system off and ignored any trading signals. What you can do is just the same with any trading system or robot. Determining the trend using a simple moving average can be replaced with a more sophisticated, versatile technique that you will learn soon.